Hello everybody, welcome to Monday Morning Must Knows. My name is Merlin Rothfeld, and there are a ton of things to pay attention to for the upcoming trading week, and I'll actually show you some supply and demand grid levels which may be of interest to you as well. So let's kick things off with the usual. We'll start things off with our earnings calendar. It's not that exciting this week, I know, not a ton. There's only 355 companies reporting this week. However, there are some big names you might recognize early on in the week. On Monday, we start things off with Dell, Urban Outfitters, Agilent, and Zoom, which has been really going sideways for months after a colossal slide from its pandemic peak. Now, Tuesday is probably the best day of the week with regards to earnings. See some major names in here: Baidu, Best Buy, Medtronic, Abercrombie & Fitch, Autodesk, Dollar Tree, and VMware. Now, this is important because as we've seen over the past week, last week we had retail sales numbers, which is better than expected, and almost all the retailers were posting great numbers. Macy's just blowing out earnings. The only one that really missed and was odd was Target. Everything else doing really well, and that might carry over into the earnings coming this trading week. Now, let's move forward from there. Wednesday, we've got John Deere, and that's it. Whole week gets quiet after this. Thursday, you've got nothing. And Friday, Pinduoduo, which I know you are all on the edge of your seat to see what comes out with Pinduoduo's earnings. Now, let's talk about trading and analysis and kind of utilizing as many tools and resources to help you in your trading, or at least the discovery and finding of trading opportunities. Now, one of the things I like to do in my day-to-day activities is I'm always looking at charts, thousands and thousands of charts, to find opportunities that I feel will serve my trading plan the best. So my day usually consists of looking for supply and demand zones across a variety of different instruments. And one that I found recently that I am actually very interested in is going to be a demand zone on gold. And this is a point where I feel that there's a high probability of market prices turning, whether that's due to institutional demand or just price levels. Now, the other thing I like to do is I will go and utilize the tools and resources available to me. And one of those tools and resources is what's called the Mastermind Grid. Now, some of you have access to this and don't use it. Shame on you. Use this thing. Others that don't have access to it, you might want to look at obtaining access to it. But I'm going to walk you through one zone here that I think is important, at least for me in this upcoming trading week, because I think it will probably come into play, and that is gold. Here's just a snapshot of the Mastermind Grid, and of course you can see across the top some of the different instruments. This is updated on a regular basis by our team at Online Trading Academy. We've got futures in here, we've got ETFs, you've got bond products, currencies, metals, cryptocurrencies, all kinds of different ETFs. There are dozens of different instruments that they track, and you can see we've got 3 supply zones above and 3 demand zones below. Each one of these is tailor fit for the core strategy, which is taught at Online Trading Academy. Now, the one I want you to focus on is down in the bottom right-hand corner. You can see in that COMEX gold column, which is gold futures, there's a demand zone right around 1715.60 to 1705.50. Now, what does that mean? That doesn't mean that this is the level where price is going to hit and automatically turn around. However, judging by the structure of the price chart and the criteria that we look for to define a supply or a demand zone, there is a good chance that price may slow down and turn here. So, of course, it's my job as a trader to take that information and now craft my trade plan around it. Where's my entry? Where's my stop loss? And where's my price target? Now, why I like this one so much is I did all my levels independently, and then I like to look at this and see if any of them line up. And lo and behold, we had a pretty good lineup. So let's go out and look at the Click platform real quick and see what the chart looks like. So here you see the gold chart in Click. This is the GC futures, and on the right side, you can see that price has had an aggressive run up for the month of November, just really strong move, and now it's starting to roll over. Now, this is partly due to the recent moves in the US dollar, but the pullback in that gold chart looks like it could head back down to that demand zone that you see mapped out. Now, what makes this very interesting for me is this entire chart has been on a downtrend since April, right? Gold has been looking very weak. You can see the left side, we're making lower highs and lower lows, but all of a sudden in November, we broke the high from October, and that's key. That means that for whatever reason, we have now moved through supply. We've taken sellers out of the equation, and that's very positive for gold. Now, just like a track star, as things run up, they generally take a little bit of a breather before starting the next move in the same direction, and that's what I'm anticipating here. I'm anticipating gold dropping from current levels down to right around 1,710, somewhere in that area, inside that demand zone. And if that does happen, then I will structure my trade by mapping out my entry, my stop loss, and my price target so I can define my risk and my reward on that trade. But I thought I would share that with you because supply and demand has become a cornerstone for how I trade. And if you'd like to learn more about supply and demand methodology, core strategy, and just the rules and structure that Online Trading Academy teaches, you can click that link that's showing up on the right-hand corner of your screen or in the link down in the description of this video below to take a free class to learn more about core strategy and market timing. All right, let's move on to macroeconomic pieces. We have a lot of stuff going on from the big picture around the world, and that's going to start things off with services and manufacturing data, not just for the US, but for around the world. And that really is going to be loaded, a stacked day on Wednesday. If we look here, we start off at 3:15 in the morning in France with their services and manufacturing numbers. 3:30, you've got Germany. 4 a.m., you have the EU as a whole. Moving on across the pond, you've got England reporting at 4:30 in the morning, and then, of course, bringing it back to the U.S., 9:45 Eastern Standard Time. That's 15 minutes into the trading day. They will be reporting services manufacturing numbers. Now, of course, this is important because we want to see how different countries and economies are doing. If all of a sudden England and EU really starts to take a nosedive economically, that will probably carry over into the United States and vice versa. So it's kind of this rising tide floats all boat. Now, the leader of this, just the way the market dynamics work, is going to be the United States. That's probably the most market influential one. But make sure that you pay attention to those other announcements to get a feel for how Europe is doing, how England is doing, and that could give us clues as to their economy, inflation, growth, and maybe what their central banks will be doing with rates going forward. All right, moving on to our final piece of data. Yes, one left to go, and that is about central banks. We are in this race to raise rates as quickly as possible to fight inflation around the globe. And lo and behold, we do have one central bank reporting this week with a major announcement with regards to their rates, and that is the Reserve Bank of New Zealand coming out with their official bank rate, and that's going to happen on Tuesday at 8 p.m. Eastern Standard Time. Right now, the expectations are that they're going to go from 3.5% up to 4.25%. That's a 75 basis point increase. Very aggressive, but New Zealand obviously feels that inflation is a problem in their country, just like we do in the US, just like they do in England and in Europe. So we're seeing this race to raise rates aggressively. Now, the question we all have is, will it work? Will this fight inflation, or will this create even more problems? That's for the future to decide. All we can know for sure is that on Tuesday at 8 p.m. Eastern Standard Time, we'll see an announcement. And for anybody here who's trading the New Zealand dollar currency pairs, you may see a lot of volatility. And you'll also get some clarity as to what may be happening around the world with regards to inflation, growth, and interest rates going forward. That, my friends, is your Monday Morning Must-Knows. We'll see you next week.